Equity shareholders are permanent shareholder, whereas a preference shareholders are temporary shareholder. Trial balance has got two sides. One is called debit side, one is called the credit side. Debit side shows the expenses, credit side shows the income. Debit side shows the asset, credit shows the liability. The items in the trial balance should appear only once. The items in the adjustment should appear twice. Hello, my dear student. I am Dr. B.S. Subramania, called by name Dr. BSS, Professor in Commerce and Management, Vidhyaashram First Aid College. Today, I am going to handle BCom third semester Corporate Accounting 1, Session 2. In the last session, I completed 10 marks question. Today, I am going to complete 2 questions of 15 marks. We'll move on now. This is the issue of share of a company, of a joint stock company. In a joint stock, I will give a little bit hint of this before going to journal entries pass, because they want to ask to pass the journal entry here. So we'll go very, very slowly. So in a joint stock company, we have got 2 types of share. One is called equity share, another is called the preference share. Which are the 2 types? One is the equity share, another is the preference share. Equity shareholders are permanent shareholder, whereas a preference shareholders are temporary shareholder. I will repeat once again. The 2 types of shares are equity share and the preference share. Equity shareholders are permanent shareholder, whereas preference shareholders are temporary shareholder. Equity share can vote, preference share cannot be voted. Equity share can be transferred, preference share cannot be transferred. The rate of dividend of equity share is not fixed. The rate of dividend of preference share is fixed. When the company liquidate, first we'll pay the preference shareholder capital, their dividend. If any amount left over, that goes in favor of equity share. So now we are going to enter the problem. So first we have to pass the entry. So before going to entry, what we have to think of? First, if we issue the share rupees 10, we won't collect 10 rupees directly. First, on application, that is called the installment, we say. First, he has to pay on application, then he has to pay an allotment, then he has to pay on the first call, then he has to pay on the final call. So why they do all these things? No, here a small example for this. The company is having about 10,000 shares. But we received 15,000 application. How many shares are there? 10,000 share. How many application received? 15,000. How many application more? 5,000 application more. Which application should be rejected is a problem. So what the company will do? They will kept all the 15,000 application in a box. They randomly pick about the 5,000 application. Those application will be rejected. Money will be refunded. This is a regular procedure. Sometimes there is one word called pro rata. They may accept about 12,000 application. For 10,000 share, they may accept 12,000 application. That's called a pro rata method, we say. So that is nothing but 10,000 is to 12,000. Cancel the 0. 2 5s are 2 6s are. So there is the ratio of 5:6. This is called pro rata method. So how you are going to collect? First on application, then on allotment, then on the first call, then on the final call. If they are not in a position to pay the money, their shares will be forfeited. The common entry, which I am going to repeat now. First entry, bank account data to share application account. Second entry, share application account data to share capital account. By chance, if the excess application comes, see this problem, 10,000, how many application? 15,000. How much accepted? 12,000. 3,000 application will be adjusted to allotment. The common entries are bank account data to share application account data to share capital to bank account to share allotment account. I will repeat, bank account data to share application account. Second entry, share application account data to share capital to bank account to share allotment. Then due entry for allotment including the premium, share allotment account data to share capital to share premium. Next entry, bank account data to share allotment account. First call, share first call account data to share capital account. When you receive the money, bank account data to share first call account. Regarding the final call, share final call account data to share capital account. When you receive the money, bank account data to share final call. So we'll go through the problem now. Anita Company Limited invited application for 80,000 shares of rupees 10 each at a premium of 2 rupees 50 paisa. What's the real value? 10 rupees. Extra money is 2 rupees 50 paisa share payable. On application, he has to pay 3. On allotment, 4 rupees 50 paisa, including the premium. If the premium is 2 rupees 50 paisa, the real value becomes 2 rupees. Totally, it is 4 rupees 50 paisa. Then he has to pay on the first call. Then he has to pay on the second and final call. Application were received for 90,000 share. Actually, we applied only 80,000 share. How many application received? 90,000 share. Out of which application 5,000 shares were rejected and the money refunded. Out of 90, how much rejected? 5,000 is rejected. So another is 85,000 is there. Another 5,000 will be adjusted to allot and money refunded to them. The allotment made pro rata to remaining applicant. Excess application money was used against the allotment. You received 90,000 application, but you have got only 80,000 share. Here, 5,000 applications were rejected. No share allotted. Balance is 85,000. You got 80,000. This is called pro rata. This is called pro rata allotment. How many application? 90,000. How many share? 80,000. How much rejected? 5,000. How much accepted? 85,000 for 80,000. The excess 5,000 adjustment. Excess application money was used against the amount due on already adjusted to allotment. I will explain while you are passing the entry. Then, Mr. Anil, to whom 2,000 shares were allotted, fails to pay the first call. Means he paid application, he paid allotment, fails to pay the first call. His shares were forfeited immediately. Suddenly, his shares were remitted. Mr. Arun, the holder of 1,000 shares, failed to pay the second and final call. His shares were forfeited. All the forfeited shares were reissued to Mr. Arjun at rupees 8 per share, credited as fully paid. Pass necessary journal entry and prepare the balance sheet. We'll go very slowly now. Journal entries. Date, particulars, ledger folio, debit, credit, followed with rupees. How many application received? You received 90,000 application. What's your application money? 3 rupees. First entry. Bank account data 90,000 into 3, 2,70,000 to share application. 2,70,000. So what's the first entry? Bank account data to share application account 2,70,000 being application money received. Second entry. Out of that, how many applications were rejected? 5,000. Remaining 5,000 will be adjusted to allotment. Share application account data 2,70,000 to share capital. Real money you require. How many shares are there? Only 80,000. So this is 80,000 into 3, 2,40,000. How many application rejected? 5,000. 2 bank account. 5,000 into 3. 15,000. This is rejected, money refunded. The excess money adjusted to allotment. 2 share allotment. Another 5,000 into 3. 15,000. See that? What is the total money? 2,70,000. How much credited to capital? Real money 80,000 into 3. 2,40,000. How much rejected? 5,000. 5,000 into 3. 15,000. How much excess is still? Another 5,000. Adjusted to allotment. Being money adjusted. Then third one, due entry. You have got 4 rupees 50 paisa. Real money is 2. Excess is there. So for 80,000 share allotment account debtor. So 80,000 into 4 rupees 50 paisa. 4 rupees 50 paisa, including the premium. How many shares are there? 8. 3,60,000. 2 share capital. 80,000 into 2. Real money. 1,60,000. 2 share premium. 80,000 into 2 rupees 50 paisa. This is 2 lakh. So what is the entry? Share allotment account debtor 3,60,000. 2 share capital 1,60,000. 2 share premium being the allotment money. Due. This is due entry. What is the entry? Share allotment account debtor, 2 share capital, 2 share premium. Then next entry. See that already you received 15,000. What's the due entry? Fourth entry. Bank account debtor 3,60,000 minus 15,000. 3,45,000. 2 share allotment. Allotment money received. Then fifth entry, first call. What's the value of the first call? Come back here, this over. First call is 2 rupees. Due entry. Share first call account debtor 80,000 into 2, 1,60,000. 2 share capital 1,60,000. Due entry. You have to receive on the first call how much money? Share first call account debtor to share capital account. Due entry. Due. Now, how many shares you could not receive? Says 2,000 share. You call for 80,000 share. How much money you could not receive? 2,000 means 78,000. Number 6. Bank account debtor 78,000 into 2, 1,56,000 to share first call. 1,56,000. So your 2,000 shares have been forfeited immediately. The 2000 holder paid application 3. Allotment, though it is 4 rupees, 50 paise are leaving the premium, it is 2 rupees. First call is 2. He fails to pay the first call. So what he has paid? Application is paid. Allotment he paid, but fails to pay the first call. Totally 7 rupees. Immediately forfeited. This is entry for forfeiture. So this is the entry for forfeiture. Share capital account debtor. Share capital account debtor. On how many share? 2000 share at rupees 7. 7 no? 3 plus 2 plus 7. 14,000. 2 forfeited share. How much already paid? He paid application, he paid allotment 2,000 to 5, 10,000. He fails to pay the first call, 2 share first call. So 2,000 into 2, 4,000. What's the entry? Share capital account debtor 14,000, 2,000 into 7, 2 forfeited share is already paid. Fails to pay. How much already paid? 10,000. How much fails to pay? 4,000. Then being forfeiture. Now, 8th entry. You have got 80,000 share, 2,000 immediately forfeited. No chance is given in the final call. You are calling only 78,000. What's the final call? See that? Your final call money is 3. On how many share? 78,000 share. Due entry? Share final call account debtor. So this is 78,000 into 3. So the 2,000 has gone. This is 78,000 into 3. 2,34,000. To share capital. 2,34,000. Due entry. Now, he received. How many shares we could not receive? 1,000 share money. How many shares money you are going to receive? 77,000. Bank account debtor. 77,000 into 3. This is out of 78. 1,000 money you could not receive means you got only 77,000. So 77,000 into 3. 2,31,000 to share final call. 2,31,000. This is final call money received. Actually, you have to receive 2,34,000, 1,000. So 1,000 to 3,000 could not be received. How much you receive? 2,31,000 we are going to receive. Now, how many shares are there? 1,000 share. He paid application 3. He paid allotment 2. He paid the first call 2, 7 rupees. He could not pay the final call rupees 3. So he fails to pay the 3 rupees. Entry for feature. Share capital account debtor. This is 1,000 share into 10,000. 2 forfeited share already paid. So 1,000 into 7, 7,000 already paid. To share final call. So 1,000 into 3, 3,000. How much he has to pay? 10,000. How much already paid? This is paid. Then fails. Then reissued at rupees 8. So 2,000 of first month, 1,000 of second, reissue entry. Bank account data 3,000 into 8, 24,000. Forfeited shares 3,000 into 2, 6,000. 2 share capital. Bank account data, forfeited shares account data. Here, per feature entry, we have to this reissue 2 share capital. That is 30,000. How much you received? Forfeited entry 3,000 in 24,000. Forfeited share account data 6,000. 2 share being reissued. Now, if we go with one by one entry, first for feature, you got share capital, forfeited share, how much? 2 forfeited share account. This is 10,000. 1. Then forfeited here, come back here, 2 forfeited, 7,000. 10 plus 7, 17,000. Minus 6, this is minus 6,000 is loss. So, next entry, 12th entry. Forfeited shares account data. This is 10,000 plus 7,000 minus 6,000. That is 11,000 to capital reserve. 11,000. So, being excess capital transferred to capital reserve. First we got 7,000, then you have got 10,000. Now, the balance sheet. Balance sheet. This is capital and liabilities. Shareholders fund. Shareholders fund. Share capital. This is 80,000 into 10, 8 lakh. This is your cap. Number 2, reserve and surplus. Only 2 items will come. Which are the 2 items? One is the cap reserve, one is the share premium. Only 2 items will come. A, share premium on allotment is there. What's your share premium? 2 lakh. Share premium, first column 2 lakh. B, capital reserve. Your capital reserve is 11,000. This is 2 lakh, 11,000. Add 10 lakh, 11,000. Total source. Assets. Cash at bank. If you go with one by one, where is the bank account? First entry, 2,70,000. 2,70,000. Then come back here. Second entry, this entry, share application to 2 share capital, 2 bank account, minus 15,000. Third entry, bank account data to share allotment, 3,45,000. Then come back to first call, bank account data to share first call, 1,56,000. First call amount. Then come back to final call, bank account data to share final call account, 2,31,000. Plus forfeited and reissue bank account data plus 24,000. If I add all these things, this is 2,70,000 plus 45, 56,000 plus 2,31,000, 24,000, 10,11,000. It will tally for 10,11,000 total application. Balance sheet under vertical column. So capital and liabilities, shareholders fund, share capital 80,000 into 10, 8 lakh, reserve and surplus, share premium 2 lakh, cap reserve 11,000, 2 lakh 11,000. So total source is 10 lakh 11,000. Asset, cash at bank, 2 lakh 70 minus 15, 3 lakh 45 plus 1 lakh 50, 2 lakh and 24,000. It will work 10 lakh 11,000 rupees. So the entries are very, very careful. Bank account, see that one by one you can pass. You can go ahead once again. What's the first entry? Bank account data to share application account data to share capital, to bank account, to share allotment account, adjusted to allotment, then due entry for allotment, share allotment account data, to share capital, to share premium account is there, due entry when you receive the money, bank account data to share allotment account being allotment money received, due entry for first call, share first call account data to share capital account receiving the money. Out of 82,000 share money could not be received, bank account data to share first call account, then forfeited immediately. This is the forfeiture entry, share capital account data to forfeited shares account to share first call account, because he paid 3,7, 14,000, he paid only 5, 10,000, he could not pay the final call. Then final call only 78,000, 2,000 share money will not be conferred because 2,000 share what's called forfeited immediately, no chance is given in the final call. The entry will be share final call account data to share capital account. This is a due entry. Here also 1,000 share money could not be received. So you are receiving only 77,000. Bank account data 2,31,000 to share final call account. To share final call account 2,31,000. Then share capital account data to forfeited share to share final call. Then reissue entry, reissued rupees 8, bank account data, forfeited share account data to share capital. So this is your loss. Then what are the gains are? We'll go with first one. For feature share, this is a paid gain. Then second entry, for forfeited share, 7,000 paid gain. Then 10,000 is a gain, 7,000 is a gain, 17,000, 6,000 is loss. Difference is 11,000 goes to capital reserve. They will kept as a capital reserve here. This is 10 plus 7 minus 6,000 is the capital reserve. So capital and liabilities, assets and property. Capital and bridge, shareholders fund, share capital 8 lakh. Second one, reserve and surplus, share premium 2 lakh, cap reserve 2 lakh 11,000. Here assets and property, cash at bank, this is your current asset. Cash at bank is the current asset. Receiving only you are going to pay back 15,000. It will come 10 lakh 11,000. So in exam, no, same type of question will be asked. Very, very carefully you have to do it, because rejection and payback, how it will pay back, common entry, bank account data to share application, then share application account data to share capital, to bank account, to share allotment account. Hope you have followed. We'll move on to next. So this is a trial balance of the final accounts. This year you have to do according to schedule number 3, 2013. of the Companies Act, you have to do it separately. They will give the trial balance. This is the trial balance. So the second question goes in favor of the company final accounts. So following is the trial balance Sarup Limited as on. So this is the trial balance is given by the company. So we are doing this time as per the vertical column. So the what's called previously we are not doing like this. This year we have to do on the vertical column. So they will give the trial balance. So trial balance has got two sides. One is called debit side, one is called the credit side. Debit side shows the expenses, credit side shows the income, debit side shows the asset, credit shows the liability. So what's the base? Debit is the expenses, credit is the income, debit is the asset, credit is the liability. So this is the problem you got. So share capital, furniture, debtor, creditor, salaries, expenditure, wages, expenditure, office, general reserve. Then profit and loss account of the last year, cash at bank balance, investment, goodwill is a fixed asset, discount received, interest on debenture paid, interest on investment is a income, advertisement income, costs in should be deducted from the capital, director and auditor fees and expenditure, income tax paid should be deducted, profit before taxation, then insurance charges, delivery charges. So the items in the trial balance should appear only once. The items in the adjustment should appear twice. We'll move on. So closing stock, it will come trading account credit side, asset side of the balance sheet. Then RBD, profit and loss account, then it should be deducted from the return. Depreciation and amortization were separate account. This year format. Statement of profit and loss account, particular note number 21, amount, revenue from operation. So sales is a revenue, cash sale, add the credit sale, minus sales, excise duty deducted, no, whatever the difference come, that is the revenue from operation. Then other income, it may be discount received, note number 22, interest received, commission received, interest on investment, share transfer fees. When the share has been transferred from one party to other party, they have to pay the fees as income to the company. All this, any other receipt also comes, you can add. So this is income. So first is the sale, second is this is the total income. So 1 and 2 is the total income. Then expenses are, first is you have to go with the same format. Format should not be changed. Cost of material consumed, no note number. Cost of goods purchased 23. Change in inventory 24. I will give a separate for this. What is change in inventory? Employees benefit, finance cost, depreciation and amortization, other expenses, total balance here. So this is your B. First income is A. Profit before taxation, A minus B. You call this as A. This is your total income. This is your A. So profit before taxation, A minus B, minus provision for taxation and income tax paid. Then add, this is profit after taxation. This is profit after taxation. Then profit of the year minus transfer to reserve, dividend proposed, whatever the difference come, that is the surplus. Balance sheet, shareholders fund, share capital 1, reserve 1, surplus 2, non-current liability in that, long-term loan, debenture, then current liability, creditor and BP, outstanding interest on debenture, provision for taxation. Then asset side, fixed asset 6, intangible fixed asset means land, building, tangible. Tangible means land, building, machinery, furniture, motor car. Intangible asset means you have got goodwill, patents and trademarks. Then investment, current assets, stock, debt or BR, cash and bank balance. Then if you go with the problem, revenue from operation is 20 lakh. This is your 20 lakh. Sales 21 lakh. Other incomes 22. Interest on investment, discount received. If you add, it is 20 lakh. 31,000 is total A. Then your expenses, cost of material consumed is not there. Purchase of stock is there. See that? Here purchases 14 lakh is there. 14 lakh. Change of inventory means opening stock minus closing stock, 50,000. Employee benefit means salaries and wages. Then finance cost means interest on debenture. You already got debenture like this. 10% debenture 2 lakh is there. 10% of 2 lakh is 20,000. You already paid interest on debenture 10,000. How much outstanding is there? Another 10,000. 10,000 plus 10,000 become 20,000. This is 20,000. This is the depreciation and amortization. I will show the separate working note for them. Then other expenses. So this, if we add now, it become profit before taxation minus income tax 40,000. This is profit after taxation. Profit of the last year 50,000, 3,78,000. There is no appropriation. Profit for the year is surplus is 3,78,000. If you go with the working note, you understand. See that change of inventory. What is change of inventory? Opening stock minus closing stock minus 50,000. Don't change it like this. If the minus figure comes, don't come like this 3 lakh minus fee. It is always a format is opening stock minus closing stock 50,000. Employees benefit number 5. Salary 50,000. Wages 60,000 become 1,10,000. Finance cost. This is debenture interest paid plus debenture interest outstanding. How much already paid? 10,000. How much outstanding? 10,000, because you have got taken 2 lakh. There's a word called 10% debenture. 10% of 2 lakh is 20,000. How much already paid? 10,000. How much outstanding? Another 10,000 become 20,000. Then depreciation amount and summary. Plant and machinery, you have got 2,55,000. Division 51,000. Then furniture 1 lakh, 10% means 10,000, 90,000 become, this is 20%, this is 10%. So it will work out 2,94,000. Note number 28, office expense 30,000, advertisement 12,000, director fees 20,000, insurance 15,000, delivery charges 39,000, RBD that we have created on data. So all this, if you add now, it become 1,22,000 that we have shown it here. Same thing, 1,22,000. This is depreciation. This is finance cost, interest on debenture. This is change of inventory, opening stock minus closing stock. Then employees benefit, nothing but salaries and wages, 60,000 plus 50,000. Then finance cost, interest on debenture paid 10,000, add outstanding 10,000, total it will come 20,000. Division and calculated. Other expenses, we have shown everything now totally. It will come 16 lakh, 63,000. If you deduct now A minus B, it will come 3 lakh, 68,000 minus income tax paid 40,000. It become 3 lakh, 28,000. Add profit of the last year 50,000. It become 3 lakh 70. There is no appropriation like this dividend, proposed dividend, or we can say transfer. Nothing is there now. Nil. Once again 3 lakh 78,000 is profit of the year, that is called surplus. Now go with the balance sheet. So shareholders fund, share capital 6 lakh, calls in arrears is 20,000. How much he paid? 5 lakh 80,000 paid. That is note number 1. Second one, reserve and surplus. Note number 2. General reserve is 2 lakh 50,000. Your surplus is 3 lakh 78,000. It works out 6 lakh 28,000. So next, third one, secure loan, 10% debenture 3 lakh. This is 2 lakh workout. Unsecured loan is nil. Totally it is 14 lakh 8,000. Come back to asset side. Fixed asset 5. You got tangible building 2 lakh 51 minus 15. Land and building is 5 lakh 20,000. Plant and machinery 2 lakh 55,000 minus division 51,000. It become 2 lakh. This is 2 lakh 4,000. Furniture is 1 lakh minus depreciation 10,000, 90,000. The value of the goodwill is 1 lakh. Totally it will work out. This is one side. Then your investment is 60,000 as per the problem. See that if you go with the trial balance, you can understand your investment is how much? 60,000. This 60,000. Then come back to current asset, loans and advance. Debtor 1 lakh 20 minus RBD 5%, 1 lakh 14,000. Cash at bank 1 lakh 70,000. Your closing stock is 3 lakh. This is note number 7. Then note number 8, current liabilities and provision. Current liabilities, that is creditor 90,000, provision for taxation 50,000, outstanding interest on debenture 10,000. Totally it will work out 1 lakh 50,000. This should be minus. Then there is no miscellaneous expense. So you are going to get preliminary expense. There is no preliminary expense. Totally, it will work out 14 lakh. It will tally for 14 lakh 8,000. So only thing you have to remember is, no, format is little bit lengthy, but you must be careful. Cost of goods purchased, they will give 23. Then change of inventory means opening stock minus closing stock. Employees benefit, employee salaries and wages. Then finance cost means interest on debenture, interest on bank charge. Here, according to this problem, only interest on debenture paid is 10,000, outstanding 10,000. Totally 20,000 will come. Then depreciation, amortization, everything is there. If you go with the problem, revenue from operation sales is 21 is 20 lakh, other incomes is 22. In that, interest on investment, discount receipt, totally it will work out 20 lakh 31,000 is your income. Expenses comes, cost of material consumed is not there. Then purchase of stock is 23 14 lakh. Change of inventory, opening stock minus closing stock as per the working note. This is as per working note. Then employee benefits are salaries and wages as per the working note. Finance cost, interest on debenture paid is 10,000, add outstanding is 10,000, totally 20,000. Depreciation and amortization 61,000. Other expense totally will work out 16 lakh 63,000. If you direct know, it will come 3 lakh 68,000 profit before taxation. If income tax is deducted 40,000, this is profit after taxation 3 lakh 58,000. Add profit of the last year 50,000, it becomes 3 lakh 78, and there is no appropriation account. So entire 3 lakh 78,000 of the current year is the surplus. Go with the balance sheet. So we'll go with this is a vertical column balance sheet as per the form says. Shareholders fund. In that, share capital 6 lakh minus calls in arrears is 20,000. It becomes 5 lakh 80,000. Reserve and surplus. In that, note number 2, general reserve is 2 lakh 50,000. Then surplus is 3 lakh, it will work out 6 lakh 28,000. Third is secure loan, 10% debenture is 2 lakh. Fourth is unsecured loan, nothing is there, 14 lakh 8,000. Come back here aside, fixed assets, tangible, building 5 lakh 20,000. Plant and machinery 2 lakh 55,000 minus division 51,000. It will work out 2 lakh 4,000. Then furniture 1 lakh minus division 10,000 become 90,000. Goodwill 1 lakh. Then next investment, note number 6, 60,000. Then current asset, loans and advances. Your debtor is 1 lakh 20,000 minus RBD 1 lakh 14,000. Cash at bank 1 lakh 70,000. It will work out 2 lakh 84,000. Closing stock, this is your closing stock 3 lakh. Current liabilities and provision. Current liability creditor 90,000. Provision for taxation 50,000. Then you will see outstanding interest on debenture 10,000. It will work out 1 lakh 50,000. Miscellaneous expenses. Generally, we get preliminary expenses. There is no preliminary expense, nil. So totally it will tally for 14 lakh 8,000. So hope I solved this session, one issue of share, one final account. In the next session, I am going to solve one liquidation, one redemption of preference share. All the four work, but you have to work out only 2 problems. So next session, we are going another 2 problems about the 15 marks discussion. In the last session, I solved about the 10 marks question. All the 10 marks questions are interested. Here, first is the issue of share, then I solved company final account. Student, please follow whatever we have done. Please go through the whatever the answer which I have given here. This is a model question paper. So same type of question will come. Section A, that means 15 marks question, you have to answer 2. Better to select one from issue of share, one liquidation, one redemption of preference. Section B, you select one debenture, redemption of debenture, bonus share, redemption of preference share. Better. And all the theory question has been sent in the PDF. So in the next session, we'll give the hint for the theory questions are considered. So hope we'll go through the problem. Best of luck in the examination because it is coming very, very near. Please work hard. Bring the good name to institution. Bring the good name to your parents. Bring the good name to your teachers. Best of luck in the examination. So in the next session, we are going to have another two problems, one on liquidation, one on redemption there. Till then, goodbye. Meet in the next session with another problem. Thank you. Thank you once again.